From an entrepreneur standpoint, some of the changes that have taken place in the banking industry has kind of negatively affected the new business owner. More banks are requiring more documentation, more papers, more verifications than what they might have required 4 or 5 years ago, and it's because of the economy. It's because some of the decisions that have been made, some of the fallout from the TARP program, where banks cut deals saying, hey, we're going to do this sort of verification on every file now. There's things that have gone on behind the scenes that unfortunately now are going to add more time, more paper, more burden to the transaction. Thereby, from an entrepreneurial standpoint, just understand that it's going to take longer. Theoretically it's more expensive because the banks are spending resources. It may not necessarily cost you more in the short run in the form of a fee or anything, but ultimately those things will add up, and eventually the long-term ramifications are it's added cost because of the additional bureaucracy and government regulation. One of the things is I've run into several customers over the last couple of years, and they've asked, about their particular business, and why they get turned down at one bank and why they get accepted at another. And one of the things I want to advise each person is, as they're looking at it, is oftentimes it's not personal. Oftentimes it's not you. It might sometimes be your business type, your type of collateral. There are certain banks right now that still probably can't do a commercial real estate loan just because they're still overburdened with them and they have to get their percentage of their portfolio down. So oftentimes it's not you, the individual, or you, the business, that's the problem.